We've got a big week ahead. We'll finally get the earnings that we've all been waiting for. The bellwether, Nvidia, of course, the poster child for the AI trade. You're seeing shares pre-market on this Monday lower. As of right now, there are a few other big reports that, of course, are going to come up. But it's really Nvidia that takes up so much of the attention because of the fact that it's driven this theme that the market has piled into. And the markets have a larger question of what that longevity looks like from here. It's going to be interesting to see exactly what this $3 trillion market cap company has to say later this week.
It's a big one in terms of market cap on the S&P 500 and why it's one to watch. Taking a look at the options market pricing heading into this earnings print from Nvidia, the stock has moved about 9% on average following earnings previously. That's according to Citigroup. Options traders, this is typical for a number here around Nvidia earnings. Options traders pricing in about a 12% move to either side following these Nvidia earnings. And remember that this is a stock that has already doubled over the past year, tripled the year prior because of those GPUs powering the AI rally. So will we continue to see that demand moving forward here, Brad?
Yeah, 100%. It's going to come down to what they have to say about the future of the data center as well. One of the more interesting things that we've heard kind of quarter over quarter here is about how companies are going to need to power the data center of the future. The amount of chips that are going to be necessary in that data center for all of the inferencing technology and the AI stories that are annexed to that inferencing technology. Well, for Nvidia, they've been able to tell the markets exactly what the markets have wanted to hear, but a lot of larger questions around whether or not for Jensen Huang and the rest of the crew over at Nvidia, if there is more in terms of the purchase orders that investors can start to price in, because now we're trying to figure out what exactly that baseline is for recurring annual orders and recurring annual revenue that we can expect from the growth that they've seen this far. The growth that they've seen is, as our own Dan Halley was talking about, it's tough to top when you're saying one quarter, hey, we've seen 200% growth, or hey, we've seen 150% growth. At some point, you face some tough comps in that growth, and that's, I think, what investors are really trying to wrap their minds around too.
Right, even if the growth story is continuing, it's been going down over the past 6 quarters. The deceleration, there you go, Brad, thank you. So will that deceleration already be priced into this earnings print, or will we see some pain on the other side? That is, of course, the big question here.